Apple, Amazon, and Microsoft, the three biggest American cap companies, are having their earnings next week. So today I want to share my pre-earnings review on what to expect, what you should be looking out for, and also my buy triggers if this stocks ever falls down after the earnings. So stick with me on this video and I will present my hard work research for you. Welcome back to Family Investment. My name is Alex Ko, and today I'm going to speak about the three mega big cap stocks: Apple, Microsoft, Amazon. So these three stocks are having their earnings on the same week, and this will determine if we will be going up or going down, and also just before the election. These are my key summaries on what I'll be speaking as a timeline. If you don't want to watch the video, you can click on the description below, but I highly recommend you watch through this series so that it helps you determine what you should be doing. As a very quick summary before I start, the key takeaways that I'm expecting for this Q3 2020 is the earnings should not be explosive. I don't expect anything. And in fact, 2 out of 3 of this company will miss their earnings, in my personal humble opinion. And that is not end of the world. But to me, it presents an opportunity to buy before Christmas, before the next Q4 2020 earning, which should be pointing upwards after the election, more stabilized economy, and also later end of the year for the COVID-19 era. So before I begin, I just want to give a shout out to my sponsor, StockCard.io, who is making this video possible. So I use StockCard.io on the VIP premium account, and I use it for daily basis, including this research which I'm doing today. So if you're interested to have StockCard.io in your investment arsenal, click on the link below. Hopefully they'll help you in your investment journey. So let's begin, and I'm going to start out with Apple. Apple is a $1.9 trillion company as it stands on a share price of $115. I am going to start with the expectations. So Apple's expectation in this quarter for Q3 2020 earnings, I would say they're most likely to miss the earnings. Why? Alex, why are you saying this? Because everybody is holding back their cash and not buy a new iPhone because they want to buy the new iPhone 12. As you can see, record-breaking iPhone 12. And Q3 earning doesn't include the iPhone 12 sales yet. That will be included in the Q4 sales, which is inclusive in Christmas. It's all planned by Apple all along. So I don't expect anybody to be buying new phones, and people are holding back. Perhaps the services and also the watches may bring an impressive quarter, but it's towards the end of the Q3 earnings. So I do not expect people holding off. And also with COVID-19 and most of the Apple shops closed, I don't anticipate anything more. Their EPS was at 0.7, which is higher than last quarter, which was a surprise breakout. I don't expect much 0.7. In fact, I'll be surprised if they even hit 0.65 on their revenue sales. And the other thing is the service delivery. I don't see much service delivery boost, even though they've been announced in the last 2 months ago. I don't expect any boost because things are just starting to ramp up. The Apple TV shouldn't be that impressive. They've got the games and Apple One. I think this should happen slowly when people start owning the iPhone 12. So in this Q3 earnings, my expectation, don't put your hopes too high. Don't be too disappointed. I just want to present this case so that you are prepared for the dip. So what do you want to do? I mean, for me, I want to own Apples in volumes because they're starting to pay dividends. With the stock split, it's making more affordable to buy Apple at $100, $110, $120. So this presents an opportunity for me to buy whenever I can afford, and can start dollar cost averaging down, maybe buy at the end of the month when I get my paycheck. This is what you should do. It presents opportunity to buy and make it easier life for people to own Apple, for my kids, for myself, for my parents. So what to watch out for in the earnings besides the sales and revenues? The one that you need to watch out is really the digital sales. The Apple Service One, is there momentum? Are people presenting? But the one that I'm excited about is the Apple Watch 6. I know that the iPhone hype has been there, but Apple Watch 6 is more revolutionary than Apple Watch 3. And think about it, Apple Watch has been around for at least for the 5th generation. So 5, 6 generation, they've collected enough data, and Apple should be looking for to create more medical products. What they've collected off our wrist, our blood count, our oxygen level, they should be presenting more. So I want to hear what are the products or what are the future data they were presenting us for our Apple medical health. That's what I find really interesting for the future of Apple in 2025, 2030. And next, I want to speak about the buy trigger. Everybody's been asking me, Alex, what's on the buy trigger? Again, I use this Fibonacci tool, which is no different from what I used in my previous video, and things hasn't really changed much after the stock split. Things might have gone up really high and back down to earth again. So we're standing at 115. So for me, I was just going to cut to the chase and tell you straight. I would buy Apple if they come down to about 110, 108. They'll be really attractive. 110, 108, I'll buy some Apple. And worst case scenario for maybe perhaps election purposes, or maybe COVID-19 getting worse, or external data that influence that comes in, Apple might drop to 102, maybe because of the dollar averaging. So my first buy is about 110, 108, and then followed by 102. They're sitting at 115 just now. I'm hoping, miss expectation, drop back down. Let me grab more Apple shares. And then when the Q4 quarter in January, including the iPhone 12 sales, including all the iWatch sales, and including all the Christmas sales and digital sales coming in, we should have a blow up Q4 earnings and again a Q1 2021 earnings. And the next one, let's go on to Microsoft. Microsoft stocks. So what should I be expecting from Microsoft? Again, I think Microsoft is also the second one on my list, which I think will miss expectation. As you can see, they put the bar really high. They put about 1.54 on their EPS earnings. And previously they were at 1.34. Yes, they beat at 1.46, but they set the bar even higher than the last Q2 earnings, which I think that's a bit high, a bit higher risk. Because what I see happen in the last 3 months, they were spending more money. They've been trying to buy TikTok, but that failed, and we're spending loads of costs on the space satellite with SpaceX. They've been spending on costs trying to beef up the Slack equivalent rival. They've been spending on the Xbox release. They've been spending on the Twilio rivals. So a lot of money has been going out. So I think despite the fact that you got high revenue, high sales, but I think you'll be dragged down from plenty of outgoing. Therefore, I personally humbly think that Microsoft will miss their earnings unless they're telling me something that I don't see, perhaps a new cloud infrastructure, but I didn't hear much from that. So what do we watch out for? Like I said, I want to see more data on how this work from home is benefiting Microsoft. I want to see if people are actually using Microsoft Teams more. People are using more of the 365 products on the personal account and also the business account. And I want to see if there's anything they've developed that's going to favor or rival for the likes of even Zoom, Twilio, and Slack. If people are actually moving, if we can see numbers growth of the business usage. That's what I'm looking for, data and numbers of genuine good organic growth. So next one for the buy trigger on the Fibonacci tool. I'm going to quote the same buy trigger points as well. I always tell people if Microsoft ever drops to 199, buy it. If Microsoft hovers near 200, you never own Microsoft, buy it. If they drop to 195, buy more. If they drop to 190, buy. Because Microsoft pays dividends, and I want to see if they're growing the dividends as well in this quarter earnings. And I want, besides the other avenues of growth, Microsoft should be classified as a dividend stock. Don't call Microsoft a growth stock no more. They are not the likes of Twilio, they are not Zoom, they are not Spotify. Microsoft has established themselves, they're paying you dividends. Treat them as a dividend stock, a growing, reliable, high cash flow dividend stock. And the last term I want to emphasize again and again and again, Microsoft for me is the most resilient stock that anybody can hold in any portfolio with or without COVID-19. With working from home or without working from home. This is how resilient Microsoft is. It's something that people should hold as a dividend growth stock. Now finally we're going to Amazon, Mr. Jeff Bezos and his team. Yes, I think Amazon will meet the EPS expectation. They will meet the EPS earnings. But what we really want to see is the sales revenue. I don't care about the Amazon Prime subscriber. I don't care about the growth in their AWS, but it's all about the revenue growth. Will Amazon still beat the revenue growth of the previous 90 billion? Will they go even higher? Are people still buying loads from their shops? Because this is quite key important facts for me. Because the likes of growth of Axie, you got the Alibaba, you still got the eBay, you got your Pinterest growth. I want to see if Amazon changing to third-party seller, changing to more influential sales seller, will this actually be dominant in growth again? Of EPS of they're expecting of EPS of 7. I think they should be good enough, about 7.01 or 7.02. They should meet expectation. They've got the data to do so since last quarter that you see their growth. And that's what I'm expecting them to do. So what do you do if they beat or they don't beat their expectation? Amazon share price is at $3,200, and I must say it is not cheap. It is not cheap to even average down. A normal human being to buy one Amazon stock would be almost a month's salary for a regular human being. What I want to watch out for this earnings is magical word called stock split. Will Amazon be stock splitting announcement this time? Everybody's hoping for Amazon a stock split, a 7-to-1 or 10-to-1. As it stands at 3,200, 3,500, it is not affordable. Not every human being can own it. Yes, we've got partial shares and all that nonsense, but end of the day, we still want to own one whole share. And I prefer Amazon to be at 300, and I can buy a couple of them, 4 or 5 of them, rather than 3,000, where I thought, can I buy one? But what if it drops? Can I buy the second one? That's a difficult task. So the next for Amazon are the buy triggers. So Amazon has dropped substantially from 3,500 down to 3,200. I would say, if I can afford, I'll buy at 3,200. It's a good support line there, and when they beat the sales, you should move it up a bit more. But if they, for some bizarre reason, if they do miss the sales, they do miss the EPS, the next boundary to buy line is at $3,000. And then the one below that is 3,805. So that would be the 3 trigger points. If you can afford to buy Amazon, buy it. But then, be wary. If they do miss, they might drop. But if they achieve the target stuff, they should be moving up by 2-3%. They should be moving up on the upwards. If you like Amazon, you can't afford to buy Amazon, there I would just say go buy the likes of Baba, own Baba, and then move elsewhere. Because end of the day, will Amazon go from 3,000 to 6,000? It's quite less likely. But I think Tesla going from the current 300 to 600 is more likely. So think about it and think about how you view Amazon in your portfolio. It's not dividend yet, it's growth, but it's very slow growth, but it's very steady yet slow growth, if you see what I mean. So that's the end of my presentation for 3 stocks. Like I said, don't expect smashing numbers. Q3 should be a slow, dull, very boring earnings, because Q3 earnings should be an opportunity to buy in some of these stocks to present for a great Q4 quarter. And these 3 companies should be no problem smashing Q4 and Q1 in the next 3 to 6 months. But for now, just relax, chill, hold your stocks. Don't try to buy and sell, because I would say this, I cannot time the stocks, you cannot time the stocks. If you timed the stock previously, I would say it's luck. Doesn't mean that you must time the stock again. So for me, it's holding volume. This dividend / slow growth company, you should own in volume, because you can sleep while you own these stocks. So it's an easy stock to buy and easy stock to own. So hopefully you have enjoyed this presentation. Please do click like and subscribe on this channel. You can follow me on my podcast if you want to, if you're driving. Follow me on my podcast if you want. Join me on Facebook, join me on Patreon if you want to be a one-on-one session. That's me, and hope to see you in the next Buy Trigger series, and also after earnings of these 3 stocks.